Good afternoon, it's Michelle Savage with XBRL US. You are here for our webinar on Inline XBRL and data quality. We're very happy to have with us today Lou Roman. Lou is the chair of the XBRL US Data Quality Committee. He is also vice president of XBRL Services at Merrill Corporation. And we also have Christine Tan. Christine is co-founder and chief research officer at Idacity. And for our session today, we're going to be covering a couple of agenda items. First, we're going to talk a little bit about the inline XBRL rule, just to refresh everyone's memory on that. Then we'll talk about data quality and how that translates into inline XBRL. And Lou Roman is going to be covering that. Then we'll take a couple of CPE questions. And then finally go to a demonstration of using inline XBRL to identify issues that you may see in your XBRL filing. So thanks again for joining. Just a couple of logistical points I wanted to make. As we go through the presentation, if you have any kind of technical issues, please email us at info@xbrl.us. That's info@xbrl.us. And also, if you are getting CPE credit, make sure that you respond to the questions that we ask at 2 points during the presentation today. And you should receive your CPE certificate within a couple of weeks of our session today. So with that, I'm going to turn it over to Lou. And Lou, you want to take it away?
Yes. So the SEC passed this rule regarding inline XBRL. And first, but very briefly, what is inline XBRL? It's really just a reporting format, but it's very important. It's a format that combines into one file the traditional HTML filing, which is that human readable file that we're all used to, and the tagged XBRL data filing, the computer readable file. So for SEC purposes, previously those two components were filed completely separate files, although they were submitted to the SEC at the same time and as part of the same filing. But they were separate files, and now Inline XBRL combines them into one file. So that's what it is. We'll get into the impact of that, and especially as it relates to data quality. So what is this Inline XBRL rule? The new rule says that there'll be no more submitting the HTML financials separate from the XBRL financials. Rather, you must submit those financials together in this new format, which is the Inline XBRL format. The rule phased in over 3 years as follows. First, the group in that 3-year phase-in is the large accelerated filers that use US GAAP, and they will start inline XBRL with their first fiscal period ending on or after June 15th of 2019, coming up this coming summer. The second group is accelerated filers that use US GAAP, and they will start with their first fiscal period ending on or after June 15th of 2020. And then the third group is all other filers, including foreign private issuers that use IFRS. They will start with their first fiscal period ending on or after June 15th of 2021. So each one comes in 1 year apart. Regardless of the phase-in, though, one important factor is that all filers will comply beginning with their either their first 10Q, or if you file 20Fs, the first 20F or 40F submitted after that completion date. So if your first filing after that compliance date is a 10K, for example, you might be a June 30th, 2019 calendar fiscal year end. In that case, that 10K would not need inline XBRL. Rather, you'd wait till your first 10Q, which would be the first quarter subsequent to that. The last thing here is that filers no longer need to post their XBRL filing on their website. And that was a rule that was in existence since 2009, and that rule no longer exists. So that was for operating companies. There's also the Inline XBRL SEC rule for fund reporting, and that's broken into two groups. The first group is the large fund groups, and that is defined as net assets of $1 billion or more as of the end of their most recent fiscal year. And for those filers, they must comply with Inline XBRL 2 years after September 17th of 2018. And why that date? It sounds kind of strange, but that was the effective date of the amendments. And the rule said after that effective date, 2 years, and therefore it's 2 years after September 17th of 2018. This second group for funds is all other funds. They will have to comply with Inline XBRL 3 years after September 17th of 2018. Also for funds, they used to have a 15 business day, I'll call it a grace period for filing the XBRL subsequent to when they filed the risk return summary. So that is eliminated. No longer will that 15-day grace period be there. Rather, now the inline XBRL will have to be filed at the same time that the risk return summary is filed. And then similar to operating companies, the filers no longer need to post their XBRL filings on their website. So that's the rule. How does this new requirement, new rule relate to data quality? Well, I can think of several reasons why inline XBRL will actually improve the quality of the tag data. And I can think of almost no reasons why it will decrease quality. So let's cover those reasons it'll improve quality. There are 4 of them that pop into mind right away. The first one, previously with submitting 2 separate files, there was a chance of having the 2 files be out of sync. What I mean by that is for a given disclosure, the amount of the disclosure was reported in the HTML with one number, and then the XBRL file reported possibly as a different number, which is clearly an error. And well, with inline XBRL, the chance of that happening is minimized since there really aren't 2 files anymore. The number is reported in just one file, so there's just one number that's being disclosed. A second way that inline improves quality is that it's easier to do analytics with inline XBRL. And that's true not just for power users, but also for non-power users, including registrants that maybe want to experiment with the data as well. Christine later will show us some of this, such as the ability to filter the data very easily. And it truly doesn't take any special IT knowledge to do this. How does that really improve the XBRL? Easier analytics mean more filers are going to be checking their data using those analytical tools, and more checking means more fixing of anomalies and errors. So that will improve the XBRL. Thirdly, the inline is going to improve the XBRL because there was a desire by filers to get the SEC XBRL viewer. And what I mean by that is that rendering that used to be that's on the SEC website. You want to get that to look the same as the presentation of the disclosures that are in the traditional financial statements. So the problem with that is too often that caused filers to erroneously change the XBRL tagging so that the XBRL rendering would be similar to the traditional HTML presentation. Having them look the same isn't necessary, and it was never required by the SEC, but it created a lot of unnecessary XBRL tagging errors and adjustments. So with inline XBRL, guess what the rendering looks like? The XBRL rendering is that pretty presentation of the traditional financial statements that we're used to seeing and reading, and that's much better since those 2 files are now one. Really, it's a beautiful thing to have that be the rendering of the XBRL. So there's really no need for anyone to erroneously change the XBRL to get a desired rendering. A fourth quality benefit, since inline XBRL puts the XBRL data immediately and directly within the rows and sentences of that traditional financial statements, it becomes easier for what I'll call a less experienced XBRL person to review the XBRL. Simply by hovering over a number in the financials, you can review the tag and all the information related to it. So it is easier. But I will say that an experienced XBRL reviewer really won't gain as much benefit from that, since there's many other ways to dive into the XBRL and review it. But I get it. Many individuals don't work with XBRL quite so much, so that ability to see the disclosure and the XBRL tagging, all of that in the same place at the same time they're looking at it is beneficial. So that does make sense. It'll bring those people that are less familiar with the XBRL just a better ability to review and understand more about what's being disclosed in the XBRL. So those are 4 items that will positively impact inline XBRL and data quality. So given those 4 improvements with inline, what else should filers be doing to improve the quality? First and foremost, the filers, they need to be aware that the use of XBRL data is significantly increasing. Data aggregators, investment analysts, investment research firms, academics, they're all using the data. And some registrant companies are even starting to use it too, for either peer analysis or for further checking of the XBRL. But even more so, regardless of all that, the SEC staff is using the XBRL data internally. And I'm not talking just about the face financial information, but the rich footnote information as well. The SEC staff has said that the XBRL data is a key tool in their analysis of filers. So as a filer, from a filer perspective, be aware that the SEC is a significant user of the XBRL data, and take account the risk and consequences of that when you're preparing the XBRL. Secondly, to improve the XBRL quality when filing inline XBRL, use the tools that are available, such as the features that you'll see in the SEC's inline XBRL viewer. Christine later will show us the benefits of this firsthand, so I will not cover those specifically now. And lastly, there's this group called the Data Quality Committee, which was created by XBRL US and consists of individuals and entities that are heavily involved with XBRL. The purpose of the group is to create automated XBRL rules and guidance to detect errors that are in the XBRL files. And the group has done that and is continuing to do that as well. I will say now that there are still errors that can't be caught by automation, so don't anybody get too comfortable with the rules that we're producing, but those rules cover many items. And fortunately, the rules are free of charge and can be run before the filing, so the errors can be identified prior to filing with an error in the XBRL. Those DQC rules, as we call them, they do support inline XBRL filings. And the types of errors that the rule checks are all listed on the XBRL US website, so you can go there to find out more about them. But to best demonstrate the data quality errors, I'd like to look at a few errors, examples. The most common error that's detected by the DQC rules is the rule that says this element can never be reported with a negative value. And any exceptions to that for a given element is covered in the rules too. So there's been a lot of scrutiny in developing the rules. There really shouldn't be any false positives in the error messages at all. And I expect some of you are saying to yourself, well, I don't have any of those types of errors in my filing, but I'd warn, be cautious about that. The DQC has detected many, many, many errors. And I want to show a real error of this type. So Christine, I'm not sure if right now at this point you can show us an error from of that type with your tools. And I don't know if I probably have to stop sharing here, but I'd like to show an element with an incorrect negative value that was detected by the DQC rules.
Sure. All right.
Okay.
I'm going to share my screen now.
Okay.
Can you see my screen?
Yes, I can see it says Audacity Inline XBRL portal
Right.
towards the upper left.
All right, thanks, Lou. Okay, so what I'm going to show you is an example of a negative value error as flagged by DQC. So let's take a look at State Auto Financial Corp. And we're going to look at their 2017. So this is the inline XBRL submission for State Auto Financial Corp. A couple of things. You'll notice that this is very similar to the inline filing for State Auto on the SEC's actual website. What we've done at Audacity is we've added additional validations into the inline viewer. So as you know, the SEC made the inline viewer source code publicly and freely available so that vendors like Audacity and other vendors can use that source code and build on top of it. So this is what we've done. We've built in the DQC errors into the viewer. So this is our version of the inline viewer. You can see that when I click on validations, you can see here that DQC, data quality checks. Here is an error, DQC _15, negative value. This is the example that Lou was talking about. So if I click on this magnifying glass, it will show me what that error is. It's available for sale securities, gross realized losses. And you can see that this is a gross realized loss, but it's being tagged with a negative value. So if I click on that, it'll take me to the exact location where this fact is being tagged. You can see within the context of this table, it's clearly a realized loss, and therefore should have been tagged as a positive number because they use a realized loss element. So if I click on that, click on this little ball here, you can see that this is the element that the company has used, and therefore the DQC check flagged this as an error because it should have been tagged as a positive. And here's an in-depth description for that. I also have another example that can illustrate negative values. I'm going to go back to the portal. I'm going to pick on this company, Biorad. And in the 2018 filing, I'm going to click on that. If I look at the DQC error here, there's another example of a DQC negative value error. I'm going to click on that little magnifying glass to find out the fact. And you can see that with Biorad Laboratories, they've tagged prepaid taxes as a negative value, which means that prepaid taxes has a negative opening balance at 1118. Now, notice that what's interesting about this fact, and this is the beauty of Inline XBRL that Lou discussed before, the fact is buried within the narrative disclosure. And so from a review point of view, whether you're reviewing your own filings or someone else is looking at your filings, they can look at the XBRL data in the context of the discussion here. And the context of the discussion provides a lot of clarity about a data point. So for instance, you can see here, clearly the company's tagged this 22.8 million as a negative value and flagged a DQC error. But you can see if you read the context of this value, it's really because they've had some sort of opening balance adjustment as a result of applying the ASU 2016-16. So rather than tag it as a negative value just on the prepaid taxes element alone, they should have dimensionally qualified because it's the impact of adopting the 2016-16 ASU. So if I click on the attribute tab, you can see that this is the element that the company used to tag this negative value. There is no dimensional qualification here. And you can see that it's flagged an error here because of that. So these are two examples that where the DQC validation checks have really called out problems in companies' filings when they've tagged certain values as negatives. Lou?
Yeah, Christine, one of the other types of errors is the amount for tag A must be less or equal than the amount of tag B. And I'm wondering if you have an example related to that one, because the DQC has put together
Sure.
A lot of work to determine for all the tags in the US GAAP taxonomy when that relationship applies.
Sure. So another example, as Lou mentioned, is this where element A must be less than or equal to element B. So here is an example for Town Square Media. In their 10K.
Are you sharing your screen?
Oops, I must have stopped sharing my screen. Can you see my screen now?
Yes.
Okay, great. So this is Town Square Media. I'm going to take a look at the most recent 10K. So if I click on that, and again, looking at the DQC checks, click on validations. Actually, this is should be the 2013. I apologize. Give me a sec. Oops. You can still see my screen, right?
Yes.
Okay, great. All right. This is the one that has that error. So if I click on validations, you can see this is the DQC error that Lou was talking about, DQC underscore 0009. Element A must be less than or equal to element B. So if I click on that little magnifying glass, it's going to show common stock shares outstanding. So if I click on that, you can see that this is the common stock shares outstanding. It's in the equity statement. I'm going to close this window out. It's in the equity statement and it's for Class A stock. So the shares outstanding is 13 million shares. Now, if you actually look at how the company tagged the issued shares, they've actually tagged, I'm going to go to the actual XBRL rendering of this, not in the inline. For the same, this is the same exact filing. You can see that the company tagged shares outstanding as 13 million, but they also tagged common stock shares issued as 9.9 million. So clearly, this is an error whereby the company should be tagging common shares outstanding not being greater than shares issued. So if I click on the attributes tab again, go down to the DQC error message. And the DQC error message is very clear. It states that, where I'm highlighting here, that the company tagged common stock shares outstanding as 13 million, and the company also tagged common stock shares issued as 9.9 million, which is clearly incorrect. So again, the DQC has flagged this potential error, and the company would need to go back and take a look at it. Lou?
All right.
Stop sharing.
Okay. And I will ask you, do you see my screen yet? Hang on. Do you see my appropriate screen?
Yes.
Okay. So for the error type that Christine first showed, that a given element can't be reported with a negative value, we've run the Data Quality Committee rules against all SEC filings since 2014 and looked at the number of actual errors detected. And unfortunately, it's not a small number of errors. Christine, can you see the graph on the next slide on the screen?
Yes.
Okay. Here's the graph that we produced based on that, and the graph consists of a time series across the bottom, so each bar represents 1/4 of filings, and the vertical axis is the number of errors. So those errors aren't a maybe it's an error or just a warning type of situation. Rather, these are definitive errors that we detected. They're real errors, and unfortunately, those errors are going to be in the SEC database always. They're mistakes in the financials submitted to the SEC. So they shouldn't be taken lightly. But if we look at this graph, on the left side of the graph, we see the amount of errors at about roughly 15,000 errors per quarter. The two higher bars are higher since they're the quarters in which most of the 10K annual reports are filed by calendar year on companies. So there are more facts being reported and tagged, and that makes sense. These bars would be higher than the others. But the errors definitely decrease as you move to the right, which is good. Interestingly, that blue line on the graph represents the date at which the DQC rule for this negative value error became effective. So to the right of the line, filers began using the DQC rule and appropriately fixed the errors that had been occurring to the left of the line. So that's very good, and we can see the DQC rules are effective and working. Even more telling is the 3 bars immediately to the left of the blue line. You can see that they're starting to decrease. The reason for that is that's when the DQC rules were created and were going through the public comment. So the rule was out there in the public, and service providers and filers began applying it and limiting errors prior to filing. So you can see those 3 bars start going down. So it's good that bars are less to the right of the line, but there's one problem here, and that's that there are still errors of this type that remain in SEC filings today and every quarter, all the way through the current quarter, 2018 Q3. And this is all despite the existence of the DQC rules, which specifically identify errors to anybody that wants to see, and they're able to be run free of charge. So the bars to the right of the blue line should be 0, in my opinion. That's the goal, or maybe not 0, but very close to it. We all want to get there someday. So every filer should be running these rules prior to filing and fixing any errors that pop. So to recap, what impact does Inline XBRL have on XBRL quality? We believe it has the 4 positive effects that I mentioned before, and 3 things filer can do to improve. 1, be aware of the increased use of XBRL and the consequences of that. 2, by using the features of SEC Inline XBRL Viewer, which Christine will show here shortly, is the second way. And then the third way filers can improve is by running the most recent set of the XBRL US Data Quality Committee rules prior to filing, and then running them every quarter thereafter and fixing any files that are identified. With that, Michelle, I will pass it back to you.
Great, thanks very much, Lou. I'm going to share my screen now. And Lou, if you have a second, if you could just take a look at some of the questions that we've received in chat. I'm not sure we're going to have a chance to get to them, but we will try.
While you're doing that,
okay,
one
so
of
you
them.
could just okay. Do you want to go ahead and answer some of those questions?
Doesn't Inline still have renderings posted to the SEC website? Yes. There is the old-fashioned rendering that isn't quite so pretty. That still is there if you want to see that, but the real rendering is the financials with the red bars above the numbers. So go ahead, Michelle.
Okay. All right. I'm going to go ahead and go with the CPE questions now, and you could take a look at those, at the questions
Sure.
we've gotten and review them for later. So I'm going to take our first poll here. So for those of you getting CPE, please take a look here. The SEC's final rule for inline XBRL requires large accelerated filers to comply, and here are three options: with their first fiscal period ending on or after June 15th, 2019, with their first fiscal period ending on or after June 15th, 2020, or with their first fiscal period ending on or after June 15th, 2021. So we'll just go for another 30 seconds here. Just click on the button to record your response if you're getting CPE credit. And we'll take one more question after this. And then we should be able to get the CPE certificates out to you. I believe it's within a week or two. So just another 10 seconds. Okay, I'm going to end this poll. And we'll go on to our next poll. Okay, and for this question, regardless of phase, all filers must comply, beginning with which kind of filing submitted after the compliance date? Is it a 10K, a 10Q, or either a 10K or a 10Q? So again, just click on the button that you think is the correct answer.
Michelle, I'm going to answer a question while you're waiting for that.
Sure.
The question is, for a non-accelerated filer that's already filing inline XBRL, does it still need to publish the financial statements on the company's website? The answer is no. As of September 17th, 2018, nobody needs to publish anything on the website. In fact, even prior filings don't have to be published anymore on the website. Go ahead, Michelle.
Great, thank you, Lou. Yeah, we just have another few seconds here. We'll take another 5 or 10 seconds. Okay, I'm going to go ahead and close down this poll. All right. And now I'm going to turn it over to Christine. And I'm going to stop sharing here, Christine. So if you want to start sharing, and she's going to take us through another demonstration here.
Oops, I was on mute. Can you see my screen?
Okay. No, we can't now. It was being shared and now it's stopped sharing. So you must have.
All right.
Excellent.
Okay, now you can hear me and see my screen.
Yes, both visuals and audio are working.
Okay, fantastic. Thank you.
All right. Thanks, Christine.
Thank you. All right, so I'm going to show you some other features that you can use within an inline XBRL viewer to help you increase your the quality of your filings. So as I said before, this is, to put in context, this is Idacity's take, our version of the SEC's inline viewer. Certainly any vendor out there can use the open source code that the SEC provided and build on their own validations and their own take on how to, to improve the inline XBRL data quality. So I'm going to show you some other validations that we have built in. So I'm going to show, for instance, Magellan Goal, that 2018 Q2 filing. And as I said before, you'll see pretty much the same rendering of this inline filing on the SEC website. What you will not see is these two tabs up here. this is the validations that we have built in. So as I said, we've built in the DQC checks. We've built in the Edgar filer manual checks. So this filing does not have any Edgar filer manual errors. And then we also built in our own Idacity custom checks. What we've done is, and this is just a starting point for us, we're continuously building in extra validations in here. But as a starting point, you can do simple things like looking at period to period, year to year variances. So if I drag this ball and say, hey, I want to look at period to period variances and all the facts that are in this filing to say greater than 500%, you can see the large variances. There are 6 of them. If I drag it to 1,000%, there are 3 of them. So what are these facts that have large variances? So I'm going to click on this little magnifying glass here, and I can take a look. So there are 3 facts here: the cash and cash equivalents, the accumulated other comprehensive income, and the foreign currency translation. These are the 3 facts that have large variances of greater than 1,000%. So from a review standpoint, it's always good just to double check to make sure that these variances are bona fide. And with the inline viewer, it's really easy to do that. You can look at the fact within the context of the surrounding disclosure. So if I click on this, you can see that this is the amount on the balance sheet. So it takes us there. And if you want to analyze it obviously in more detail, you can click on this fact, which brings us to the presentation of the same exact fact, but it's in the statement of cash flows. So you can see very clearly here, this is the fact. And within the statement of cash flows, you can see one of the big reasons why the company may have had a large jump in cash at the end of the periods because of this issuance of the common stock and stock warrants. So if I click on that and click on the attributes for this fact, if I go down, you can see that the Idacity has an explanation to discuss in detail where that large variance came from. It went from 1,427 in the previous quarter to 98,654. And if you look at the time series in the quarterly, you can see this huge jump right here from 1,427 to 98,654. And again, this is a good way to validate as a sanity check that these variances are in fact bona fide. But I think importantly, it's helpful to be able to look at the numbers and the variances within the context of the disclosure. Another example is, if I show another inline filing for Intuit, if we take a look at their recent 10K, again, looking at the validations, looking at the large variances, there are 12 facts in this Intuit 10K that had variances of greater than 1,000%. What are they? So again, if I click on that, you can see that this lists all of the facts that have variances of greater than 1,000% from year to year. So here's an interesting one for earnings per share that had an increase of 1,000%. Obviously, earnings per share is an important metric for investors. So if I click on that, you can see the time series here, okay? And you can see some interesting patterns here, always in Q3. But importantly, you can see that when I click on this, it takes me to the exact fact. And this is a fact that's buried in the footnotes of the filing, footnote 15. And you can see that this is the $4.68 for earnings per share this quarter, and then the previous quarter was 8 cents. Again, good for a sanity check to make sure that these large variances are in fact correct. An interesting fact is when you can see that the filing clearly has an issue in terms of the precision of the fact. So I'm looking here at Yum Brands, click on the earliest inline filing. If I look at the validations, looking at the Idacity custom check for 1,000% variance, click on that. And you can see that here, Their common shares outstanding is 367, I think, trillion shares, which clearly is not correct. Here's the fact that's tagged. And if you look at the quarterly, you can see that this is the number here, and you can compare that to the previous or the surrounding periods. So clearly in this particular period, they tagged it with a few extra zeros. So this is one where the validation check does actually call out a problem in the tagging itself. So that's one sort of validation check that we have built into the Idacity version of the inline viewer. Another check that we have, we wanted to put this in to sort of ensure consistency in tagging. So for instance, I'm going to pull up this filing, Raven Industries, and I'm going to look at their most recent inline filing. And what we've also added in to improve consistency in tagging from period to period is, if I click on validations and go to the Idacity custom check, you can see that there are two additional flags here. This is Idacity added elements, and this is removed elements. So if I click on the removed elements, what that's saying is that in this queue filing for Raven Industries, they have dropped the element that they had previously used in the queue before. These are the elements that they dropped: US GAAP, cost of goods sold, and the sales revenue goods net element. So these are two elements that they used in the previous 10Q filing, which they are no longer using in this particular queue filing. And if I click on the 8 elements added, this would show these are the new elements added to this filing that were not previously used in the previous queue filing. So one interesting thing that you'll note is that they had previously used US GAAP cost of goods sold, but then in this filing, they're using cost of goods and services sold. And you might ask yourself, well, why is this important? Well, this is important from a consistency standpoint. And if I click on cost of goods and services sold, you'll see that there is a time series of 2017 Q2, 2018 Q2. And if I clicked on annual, there is no time series. What does that mean? That means that basically this element was used in this filing and used to tag two facts, the 68 million and the 60 million. And because they did not use this tag in previous filings, you're not able to see that time series. So from an analysis standpoint, when you are switching tags, you need to consider the consistency and how that might limit an investor's ability or any data consumer's ability to look at the time series of the data. So if I go back to the previous Raven filing, the previous Q, and I go to the cost of goods sold, which would be in the income statement. This is the cost of sales here. And if I click on that fact, you'll see a nice time series there, the annual, going all the way back to 2009. And similarly for the Q. Notice how it's truncated at 2018 Q1 because in the Q2 filing, the company has swapped to this new tag. Keep in mind too that one interesting thing that you might want to consider is when you're switching tags, you want to be very, very careful, make sure that you're switching tags for the right reason. The caption says cost of sales in this Q filing, and that's the same exact caption in the previous filing. So if there's a really strong reason that you have to switch tags, you should, obviously. But if you are switching tags, and taking that somewhat lightly, that decision lightly, this is the result of that. You will have a truncated time series, and it inhibits, how data consumers can consume the data of your company. So that's one validation that we've put in. The other thing that we've also put in is what we call the disclosure research checklist. So I'm going to pull up, actually, I've already pulled up Pfizer's filing here. This is something that you will not see on the SEC's inline viewer. As you know, for every single element that is in the US GAAP taxonomy, that has a FASB codification on it, reference. So an element has FASB codification references, and according to the new EFM rules, you should be using those codification references to help you select the appropriate element. So what we've done is we've created this disclosure research checklist to help filers and also reviewers and investors as well to very easily navigate throughout the inline filing. So this is another benefit of Inline, the Inline viewer. It helps people to quickly navigate to the facts that are most relevant to them. So here's an example of Pfizer's filing. If I click on the disclosure research checklist, you can see here are the topic areas that we all love as accountants, right, in the FASB codification. So if we take a look at liabilities, click on that. Here you've got all the different topics that come under liabilities. So where you see a magnifying glass, that means that there are elements selected in this inline filing to tag the facts that point to topic 420 or 470. So if I click on that, that brings us to all of the elements that have been used to tag the facts that pertain to long-term debt. So if I click on this particular fact here, so this looks like it's the maturity, the repayment table. If I click on that, sure enough, it takes us to this table here. And that's the fact there, the 481 there. Now, what's really nice about the disclosure research checklist and also exploiting the relationship between an element and the FASB codification is that you can look for facts now based on the FASB codification. And in this particular example, it's quite, I think it's a good example in that it's showing here is the long-term maturity table for debt, and it is buried under this little subcaption here of long-term debt. But if you keep scrolling up, it's actually within the financial instruments footnote. So rather than do Control-Find to look for all of the debt disclosures within this Pfizer Q filing, you can easily navigate to that particular area within the filing that pertains to a topic area that you're interested in this case, long-term debt. Notice also if you look at the sections, the notes to the financials for Pfizer, you won't see a long-term debt or a debt footnote. So again, if you are just going off of the footnotes, you might miss the fact that Pfizer has some long-term debt, or if you're doing Control-Find, you could be, clicking your way through the entire document. But you can see, you can very easily navigate to the long-term debt maturity table using the disclosure research checklist. Another example I wanted to point out is we've pulled in some IFRS filings. And we've also pulled in the IFRS references as well. So I'm going to pull up this IFRS filer. I can't really pronounce the name, but it's a Dutch company. So if I click on that, actually, I have this already pulled up here. This is the Dutch company. If I click on the disclosure research checklist, you'll see that it's going to pull up here all of the IASs and all of the IFRSs. So here is an example for, say, share-based payment IFRS 2. If I click on that, you can see that there are elements selected by this Dutch company that point to share-based payment disclosures. If I click on the little magnifying glass, it will pull up all of the facts that point to IFRS 2. So for instance, employee benefits expense. If I click on that, it takes me directly to that fact, the 122 million, and here it is. What is interesting about this example is that note that the 122 is a subscript to this table here for employee benefits expense. And this table appears in this footnote, income from operations. Again, I think the point here is that when you are using the FASB codification or the IFRS references to pull up facts, it's a great way to pull up and make sure that you're covering all of the facts that pertain to, say, share-based comp or long-term debt throughout the financial statements and the footnotes, irrespective of where that particular fact is presented. So nothing is ever really hidden. The other thing from a review point, if you know that you have, for instance, long-term debt in your disclosure, and when you use the disclosure research checklist to pull up those facts and they don't show up, there is a good chance that you probably created an extension to tag those facts, because obviously if you've created an extension, it's not going to point to any of the FASB codification. So that's always also a good validation as well, to make sure that you're not extending when you should. So that's another sort of validation that we've put in. Now, you might have noticed as I've gone through the inline viewer demo that you keep seeing these charts that pop up. That's something that you won't see on the SEC Inlines Viewer version. So if I pull Delta, for instance, and this is helpful from a quality assessment standpoint to compare what tags you've used to your peers. So I'm going to take a look at Delta's 10K, the most recent 10K. And I'm going to go straight to the balance sheet. Here, I'm going to pick a really straightforward line item, cash and cash equivalents. If I click on that, you can see a nice time series here. Again, this is something that you won't see on the SEC's inline version. This is something that we have added because we believe that from a review standpoint, from an analysis standpoint, it's helpful to have the time series information here for the company to look at and for investors to look at. But what's also important is that you can add companies that you can benchmark against. So I'm going to benchmark, I've already added Continental, United Continental, American Airlines, JetBlue. And I'm going to compare the tag that's used by Delta to their peer companies. Click on refresh. Okay, so what that's showing me is, and this is the data as reported by the company. So if I click on the attributes tab, Delta used cash and cash equivalents at carrying value. And because I'm able to pull up the time series for the other companies, they've also used the exact same tag. But what's really interesting in this example is, notice that for Continental, they have a nice time series, right? So if I switch off Continental, and you can see that Delta has the same too, nice time series. I'm going to switch off Continental. What you'll notice here is once I start focusing on American and JetBlue, JetBlue has that nice time series, but American does not. So you can see that American has, their time series seems to be truncated at 2013. And that's because American used to use cash and cash equivalents at carrying value similar to their peers, but then from 2014 onwards, they stopped using that. So I have pulled up American's most recent 10K here. You can see that this is the cash that they have. If I select that, you can see that they are using US GAAP cash. So the point here is this: if you want to benchmark yourself against other companies in your peer group, you want to make sure that you're using similar tags because you don't want to look like this company here necessarily with a sort of truncated time series where all of your peers have a nice long time series and all appear to be using the same exact tag. This goes with extensions, obviously. This has the same implication for extensions. So if you're extending, you won't appear on this graph because you won't be using the same tags as everyone else. So Michelle, that's all I have to show today. I'm going to throw this back to you.
Great. Thank you very much, Christine. That was really helpful. We do have some questions, and I'll just quickly run through some of these questions. And okay, so the first question, are the codifications part of the US GAAP text?
Michelle, you just cut out.
Hi, this is David Toriola from XBRL US. Let me pull up the poll. Hold on just 1 second.
I think the question was, are these codifications part of the US GAAP taxonomy?
Thanks, Lou.
It was a question from the chat. And in the US GAAP taxonomy, yes, there are references for a given tag to the codification as appropriate for that given tag. So yes, they are in the US GAAP taxonomy. Is Michelle still on?
I think she's making her way back in. Just hold on 1 second. It looks like she's reestablished.
Yes, I am, and I apologize for that.
we did answer the question about the codifications being part of the US GAAP taxonomy.
Oh, good. That's great. All right, I'm going to go back to sharing my screen here. Okay. So yeah, why don't we take some of these questions? Actually, I don't see any open questions now, Lou. Do you see the open questions?
Yes, I see some of them.
Okay.
Do you want? I'll
yeah.
ask
Why don't you go
here.
ahead and cover those, and then we'll go into CPE.
Yeah, another one which is similar to one asked before, but it's different. It says if we had not yet adopted inline XBRL, can we remove XBRL from our company website, or is that option only available once inline is adopted? The answer to that is you can remove XBRL from your company website now. You don't have to wait till you adopt or start filing inline XBRL. That rule is really separate from inline XBRL in some respects in that it's effective immediately. And as I said, actually it's effective in the past as well. That rule has been removed.
Great, thank you, Lou. I think there was another question on cover pages.
Yes, and the question was, when should the cover page of the Form 10Q or 10K be amended for change in requirement not to post the XBRL files to the company's website? There is a question on the cover page for you that don't know that asks, have you posted all the inline or all the interactive data files and properly posted it to your website if applicable? That question will get removed or altered, probably altered to get rid of the website portion. The SEC said that in the rule that they would be changing that. So we'll wait for that to happen. I think it'll be promptly, but I can't predict when the SEC will do that. Whether you answer yes or no at this moment, I think, well, I'm not an attorney, but I think yes, you're still complying with all the rules. So that would probably be an appropriate answer. Go ahead, Michelle.
Great, thank you. Okay, why don't we go to the poll questions now for CPE? And I'm going to pull up our third poll. Okay, so this next question is, large fund groups with net assets of 1 billion or more as of the end of their most recent fiscal year must comply 1 year after the effective date of the rule, 2 years after the effective date of the rule, or 3 years after the effective date of the rule. Again, please click on the button that seems most appropriate, and then we will record your response and be able to get you your CPE certificate. Okay, we'll just give it another 30 seconds or so here. And Lou, were there any other questions, or did that cover all of our questions?
Christine, I think there was one that you wanted to take about the negative number.
Sure, yeah. So this is the example that I showed before. It was the 22 million that was tagged with prepaid taxes. It was a negative number. The company, the way that the company tagged that 22.8 million was not dimensionally qualified. So it was prepaid taxes and it was not dimensionally qualified, which means that the consolidated value for prepaid taxes that appears on the balance sheet would be a minus 22.8 million, which is obviously incorrect. So that's why it flagged the DQC error. Because it was the impact of adopting 2016, the ASU 2016-16 on prepaid taxes, that resulted in decreasing prepaid taxes. What the company should have done was dimensionally qualified that 22.8 million, that negative 22.8 million, with an axis and a member that said ASU 2016-16. So hopefully that clarifies the DQC error flag.
Great, thanks very much, Christine. Okay, I'm going to go ahead with our final poll question, which should be up on the screen now. Data Quality Committee rules are available to run on inline XBRL filings when the first companies are required to comply, or within 6 months, or immediately. So again, just record your response. We'll give this another 30 seconds or so. And when we've completed this, the poll, I'm going to go on and just talk to you about some additional programs coming up. Oh, and we actually received another question. Okay, the question is, do filers have to assign them to extension elements? Not sure.
No, for an extension element, there is usually not a reference, an accounting codification reference to them, and primarily because they're really not a disclosure that has a direct link to a codification paragraph or statement. So generally when someone creates an extension element, they do not put an accounting reference in it, and it's not required to do that.
Okay, great. Thank you, Lou. Okay, I'm going to go ahead and I just closed out the poll. Thank you for responding there. And I'm just going to move to a few final remarks. First, I want to thank our panelists very much for speaking today and sharing their insights on Inline XBRL. I think they did a great job. And I want to thank all of our attendees who listened to us today. We have recorded this call, and the webinar replay will be available tomorrow or the next day. So I just want to mention a couple of programs coming up that might be of interest to all of you. The first is the Data Quality Committee rules. And Lou spoke a little bit about these. Christine showed how you can access them in your, through the Inline viewer. The DQC rules are designed to be freely available for all issuers. They cover approximately 30 categories of potential errors. And here on the right side of your screen, you can see our webpage and how you can actually check your filing with data quality rules using a free tool that we have available there. So you can just go to xbrl.us/data quality. Some of the examples of types of rules that we cover are negative values, context date inconsistencies. So lots of different areas where it's easy to make a mistake in an XBRL filing, and we can give you instructions on how to fix that mistake. The rules that we've created are consistent with the newly introduced SEC flagging errors. So, we are consistent with those rules. So it's really incumbent upon every SEC filer to use these rules to improve the consistency and quality of your filings. And as I said, you can use the free tool that we have available here, which allows you to upload your filing and check it against the rules. Or better yet, use a piece of certified software. We certify different member applications and tools and services that are capable of running the rules successfully. We have 6 sets of rules at this point in time. We're working on finalizing a 7th that should be out before year end. And so right now you can go to the data quality certification page, which you see here in front of you, and look for those tools that are certified with the DQC rules and guidance rule set number 6. So again, you can just go to XBRL/data quality/certification and find the rule set, or find the software applications that are certified to successfully run the rules. The last program I want to mention is actually an event. This is a half-day conference that we hold each year in New York. This year it's called Investor Forum 2018, Powering FinTech. And we're very excited because this year we have keynote speaker SEC Commissioner Robert J. Jackson. The event takes place November 8th. It is a free event. It's open to all attendees. However, we do require registration. So just go to this page, xbrl.us/events/forum 2018, or just go to our main webpage, xbrl.us, and you can find all of these programs. But I hope to see you in New York, and I hope you have a chance to check out the data quality rules and use them, and watch for upcoming events that we have. Thanks very much, and we'll see you on our next event. And again, Christine and Lou, thank you so much for joining us today.